It seems like some of the Fed officials are opening fire on the markets right now because hawkishness is back in fashion, it seems like. The S&P 500 and NASDAQ were down more than 0.5%, and the Dow Jones sank around 400 points on Wednesday as bond yields continued to rise following disappointing bond auctions yesterday. All sectors were in the red, with financials among the worst performers. American Airlines sank nearly 13.5% after the company cut its sales outlook. So let's talk about this. Let's unpack everything that's going on. I'll be sharing some of my current positions, my thoughts for the indices, gold, the dollar, and much more. Let's jump in. So starting off, we'll take a look at the daily chart on the S&P 500, which is down 0.53% today. The NASDAQ looks pretty similar, though has bounced slightly at the time of recording this video. And the Dow Jones of the big three is the worst performer, down 0.8% on the day. And this is after a pretty strong slide recently to the downside for the Dow Jones. And again, why the outperformance from the NASDAQ? Well, arguably it is because of the NVIDIA move that we've seen recently, which is tech-centric. A lot of tech stocks have actually done pretty good recently off the back of earnings, and specifically the NVIDIA earnings, whereas the Dow Jones is not so heavily concentrated in technology. So it is taking a little bit more of a beating here off of the yields rising, which we'll get into in a second. Real quick, I also wanted to let you guys know about today's video sponsor, Vantage Markets. And if you haven't heard about Vantage before, they're a wonderful brokerage that is allowing non-US people, unfortunately for us US traders, we can't trade with Vantage, but for non-US traders, if you're looking to trade CFDs, if you want to trade everything from stock CFDs to foreign exchange to commodity CFDs and stock indices CFDs, you could do so with today's video sponsor, Vantage Markets. If you'd like to find out more information about what they offer and about their special offer or their deposit bonus, things like that, you can find out all the information down below in the description. Another market taking a beating is the Russell 2000 down 1%, and it is the worst performer of the top 4 US indices. Gold is down 0.7%, silver down 0.34%, and when we have a look at the 10-year government bond, you can see the yields are creeping higher. Now, what this tells you, remember, is that bonds and yields move inversely. So the price of the bond is currently moving down while the yields offered on those bonds are going up. Let's unpack that bond auction concept for a second for those of you who don't fully understand how that works. US Treasury bonds are sold at what is called a bond auction. And this is where basically investors, both commercial people, individual people, everybody can go buy bonds from the US and essentially lend the government money in exchange for what is called a yield. Now this is very important to the overall market, so pay close attention to this. If you don't understand, this is very key to what happens with the dollar index and the indices and gold and, well, just about everything else. It might even impact, whether or not you're in a good or bad mood. It's that powerful. But anyways, it might impact the weather. I don't know. Bond yields go up when prices go down because if nobody wants to buy bonds, right, the price of those bonds comes down, just like your standard auction. Picture an auction for a second. You're at an auction and everybody is bidding on things for one product, but then another product comes up and nobody wants it. So nobody's bidding, and the auctioneer keeps dropping the bid. Well, that's what's happening. And when they drop the bid, the equivalent to that is they actually up the yield. The offering of the bond becomes juicier. If I offer you a bond at 5% and you say, nah, 5%'s not good enough, I might then try 5.1%. And if that's not good enough, maybe I'll offer 5.2%. And let's say that's the one that gets people to say, I'll buy it, right? That's how a bond auction works. And so when we see yields rising, that tells us that bond prices are going down. Bond offerings are going down right now. And you have to ask yourself, why is that? And one of the big answers to that is, of course, the inflation story. Now, focus your attention to the blue line here. And what we can see is that inflation overall, even though all the progress that the Fed has been working towards in terms of keeping interest rates higher for longer, many people are now wondering if their policy has been restrictive enough or held for higher for longer, like the interest rate has been held high enough for a long enough period to start to squash inflation. And there are some doubts, and that is why yields are creeping higher. It's because people are saying, well, inflation's going to stay stubborn, meaning that if I buy a bond and I only get 5%, but inflation's going to stay at 3%, I'm really only getting a 2% yield. Right? So, if you take the 5% offered by the bond, but then you lose 3% to the inflation of the dollar, I'm only getting 2%. So people are saying, no, I need more like 5.2% or something like that, right? This is just an example in order to make this worth my time, worth my risk, worth my investment. So that's a little bit of the story and how important bonds are. I know a lot of people ask about bonds, so if that was helpful to you, do me a quick favor, hit the thumbs up button on the video down below. Also, by the way, if you guys would like to try out the Edge Finder for 30 days, there is a link down below in the description to fill out a quick application, which will allow our team to see if you're a good fit for the tool. And if so, we'll reach out to you with information about how you can get set up with a 30-day access trial to our tool. So again, that link can be found down below in the description. Now back to the video. I personally am in the camp that I think that yields will actually start to come back down pretty soon, because I think that some of the economic data that's been coming out has been quite weak and could lead towards inflation starting to cool off again. We'll see if I'm right about that, but I am thinking that in the forward months, we should see inflation start to materially come down. Now, if it doesn't, we have problems. If inflation does not come down, the Fed may need to be more restrictive in their policy, or at least keep their current policy for a longer period of time, which would cause things like gold to actually sell off. So right now, from a price action perspective, when I pull up the chart for gold, I like this level of support as long as we hold that support. If we break this level, I will stop out on this trade and take a loss. At the same time, this is a setup on the Edge Finder's top setups page. You can see here, currently we're getting setups on gold, the pound, euro. On the bullish side, also bonds themselves. I like the dip here, so I'm going to continue to watch those. I have a position on TLT, which is a bond ETF. We can also take a look on the sell side here. We have the Russell, Bitcoin, silver, dollar Swiss, and oil, which I do have a position on as well. Let's pull up the oil chart and we can see my trade has gone against me initially, but now is just about back into very slight profit. I think oil has downside for the same reasons. If the economy does continue to slow, the demand side for oil could be put under pressure, and perhaps we do move lower, maybe head back down to the mid to low 70s, which could again be very good for my position. It is a small trade for me. If we stop out, if I stop out, it will be because price breaks higher, and on my USO position, I would lose, somewhere around $400. So not a huge trade for me, but still watching it close. Here's my gold trade, which I think is slightly in the red now. Yep, down. This one is a much larger sized position, as I really like the gold trade recently. I've made a lot of money on the upside of gold recently, and if I lose on this one, I'm just giving back some of my gains. So I'm fine with that, and I'm willing to take the risk because I think that gold has upside. If I'm wrong, again, stop loss is there for a reason. In terms of the indices, as we pull back here, I'm very curious to see if we hit this 5250 level, how price reacts. Do we bounce off this level and continue the party? Or if this level breaks, I think we may have more downside to come. That's my thought, at least on this recent push. And, when we take a look here at the NASDAQ as well, you can see the NASDAQ has been trending higher overall and actually outperforming the others. In fact, I mentioned this earlier, but the Dow Jones has been the laggard of the three. And I had a good conversation about this with Chris Pulver on the live stream here today. So I just wanted to include that clip from when Chris and I discussed NVIDIA, the Dow Jones, and so much more.
Just going back to the last couple of weeks, I mean, you're clearly seeing a different performance from all the major indexes and ETFs. I mean, the Dow, from this all-time high that we've already had a pullback. I'm just going to go with the current price. So we're down over 3% from the all-time high on the DIA. That's the diamonds, which is your ETF for the Dow. If you go to the QQQ, because of NVIDIA, we're just clinging to these same highs. This big red candle here is the NVIDIA high that we talked about a lot last week. And my thoughts going into this week's trading was you have to watch the trading on that candle, because above it, below it, that's essentially your breakout. I could see, inside candles this week, which is what we've had. So today, this is Wednesday's candle. Tuesday, there wasn't a day trading on Monday because of the holiday. So we have Friday last week, Tuesday this week, and today thus far, all staying inside of that NVIDIA candle from last week, Thursday. Go to the SPY. Very similar. We're sitting here on the cusp of trying to maybe breach the lows from NVIDIA sell-off last week, Thursday. Again, that's the SPY. So Thursday sell-off, Friday's indecision, Tuesday's indecision. Today we gapped way lower, like $4 lower, but yet this is what price looks like in real time. There's the close from yesterday. There's the open today. Live levels that I'm watching right now, I mean, 525, obviously we're right there. That's at the lows from last week, Thursday. If we have a big sell-off day, you have to remember last week, Thursday, we had an $8 sell-off on the SPY single day from the high to low. That was on Thursday last week. I mean, do we have another push coming to push the SPY to 520? Maybe. But my point is, there's a big discrepancy in who's performing best. The Dow is performing like crap compared to the NASDAQ, compared to the SPY. The SPY's clinging to these highs, but the Qs are doing way better right now. And again, nothing has changed, Nick, right? Like, this is all NVIDIA. It's not like all of a sudden
I was going to say, I was saying it as a joke, Chris, but it genuinely, I was kidding when I said it, but it genuinely is exactly what you're pointing out now that you're saying it. It's SMH, right? You take a look at the semiconductors have just, become a larger and larger component of the S&P 500 and the NASDAQ relative to the Dow. It's a different story, right? So the Dow Jones and the Russell, these companies that are not so chip focused, which has been where all of the gains have been made, are seeing, a bit of a beat down in relation to the S&P and the NASDAQ. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.